Good morning, this is Ron Brown. It's October 1st, 2022. I'm going to take a very quick look at the market. I'm going to limit this to 10 or 15 minutes at the most. Anyway, here's my disclaimer. All trading strategies are used at your own risk. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. You can get a free 30-day trial of HGSI at highgrowthstock.com. Just go there and look for the trial button. Okay, let's start here where I usually start using the NASDAQ comp, which is a lot of growth stocks are in here, and you can see what has happened with this index. Now I'm going to hit my alternate 2 key, and what this does is it gives me a longer look at the daily chart. I'll open this up. I'll put a crosshair on it. I guess I can zoom back in at this level. Okay, with the crosshair, if you look over here at this point, we are challenging that level. If this level is broken at the close, and I'm going to switch to a monthly by hitting the alternate M key, you can see that the monthly downtrend will resume. We've had monthly downtrends up here. We had a rally. This was rejected this month. If this is broken, we go into a monthly downtrend, which is very bad for the market. For the longs anyway. Okay, so just keep an eye on that. Let's look at a couple of other charts quickly. Here's I want to go to number 3. This is the advanced decline line. You can see this. It's going down. Let's go back up 1 to the new high-low line. The new lows were spiking more here than they are here. I guess that's somewhat encouraging, but the new lows are clearly still outnumbering the new highs. Let's go back and look at the advanced decline line one more time. You can see it rallied here, and now it's at the point where it's actually broken below the other index. Now, I'm just going to stick with the NASDAQ 100 because that is my primary emphasis, and I want to point some things out here. I'm going to click up here on this one, bring this in to view, and then I'll get my arrow here. You can see volume was less than average again on this index, but I'm seeing above average volume on other indexes. Major trends down, of course. All of the trends are down. We're down 34.8% from the 52-week high, only 0.1% above the 52-week low. Since the beginning of the year, down 32.4%. The fan is down. Volume was 11% below the 90-day, and that's also reflected over here where you can see it a little bit better. Advancers 1252, decliners 1927. That's not horrible. It's about a 3-2 negative. And here's the new highs and new lows. And ARMS is finally saying that there's a lot of distribution. I do not like or not use the ARMS much anymore because I think the readings are very misleading. But I've had it in here for so long, I'll just leave it. So anyway, the NASDAQ is down on lower volume, but I'm going to change charts here. I'm going to get out of here and go down to my contextual charts here. Let's get a daily chart black here, and I just want to put the SPY in here and show you that the SPY volume was very heavy yesterday. And also the QQQ was heavy also. It wasn't as heavy as the day before, but you can see there's a lot of selling in those two proxies for both the S&P 500 and also the NASDAQ 100. I'm going to go to my designer and down into the market analysis user groups, and I'm going to go into the indexes and sectors. I'll click through to the warehouse. This is where I already had it up, I guess. This is where I want to go into the HGSI index analysis, the percentage price change 1 day. I'll sort on raw combo. Now notice that all of these indexes are down other than the materials sector. And what I wanted to point out here is look at the volume on these HGSI indexes, which are produced by HGSI. It's volume's up on all of these. Okay, let's go take a look at the broader market here, the S&P 500, and then I'll quickly move up to my HGSI index charts, and I'll look at this chart which shows the percentage of stocks above their 20-day moving average, their 30-day moving average, their 50-day moving average, and their 200-day moving average, and you can see that they continue to move down. If you use your alternate I key and make sure you're on the last day, you can see the percentages here. And looking at this on the 30th, which was yesterday, the percent of the index above the 20-day moving average is only 1.8%, above the 30-day 1.8, above the 50-day 2.4, and above the 200-day only 10.2. So this shows clearly how oversold this market is. Now look at this right here. Here's another couple more back-to-back selling days. Here was the sale day. We didn't have a buy signal since this day right here based upon my indicators. So here was the last sale day, and that was an effort to fall, and it's been falling ever since. Let's look at this in the candlestick version. It's just a little easier to see. This is chart 6A, and I'm in the folder Major Indexes and Sectors. So chart 6A, right here was a sell signal, and it hasn't looked back. There is an effort to fall flag in there. You can't see it through that red candle, but it's there. Now I'm going to move down to the Mcclellan Oscillator. You can see it's been lower here, but this is just another indication of how oversold this market is. Look at this undercut here a few days ago on this down move. This is comparing the advancers versus decliners. In fact, if you want to know what it is, just edit the indicator, go into McClellan, and it tells you what it is. It's an index breadth indicator computed from the difference of the 19-day EMA and the 39-day EMA of the difference of advancing and declining issues. But rarely, and this is a 2-year chart, rarely do we see it get this oversold. And then it rallied a little bit. It wasn't quite as oversold, but now it's headed back down. Okay, I want to look at one more chart in here. This is the AD line based upon this index, and this is the percent above the 50. And if you look down here, I'll zoom in on this. You can see that there was a big volume spike here on the computed index. These are computed by HGSI. So what I'm seeing, other than with the NASDAQ composite, which said below average volume, I'm seeing selling pressure on these indexes that are computed by HGSI, and also on the SPY and the QQQ. So maybe we're at that level where fear is setting in. The heavier volume would tell us that. All indexes, all charts are going in the wrong direction. They're going down. I paused for a second to switch to this. This is just a black chart of the S&P 500, which of the index, which is calculated by HGSI. And here you can clearly see the volume spike. There was a big volume spike on this day. Big volume spike on this day, not nearly so much, but if you look here, all of these trends are down. Everything's down, sentiment's bearish, volume's very high here, and the spread is above average. The only positives I'm seeing on this market is the increased volume, the selling on increased volume, which could mean the end is near for this market downturn. And the market's completely oversold. Let's do one more quick thing. I did a video yesterday about a new user smart group that I put in there called Relative Strength Leaders. And let's see if there's 25 of them. You can see yesterday that I need to go to a different view. The groups that are represented are application software, biotech, exploration and production, and specialty pharma. You can see there's a lot of specialty pharma here. Now these have to have an RS rank of at least 97, and that's what you can see that all of these are up except for one, and it was down barely. Let's look at the range. Some of them closed near the top of their range, so that's where the strength was. This is an exploration and production stock, integrated oil, biotechs, and so on. But even in a really bad market, there are winning stocks. It's really hard to take them because they may not follow through because of the downward pressure of the market. But I put these scans in here just so you could, if you're looking for alongside trades, if the market starts getting more stability to it, some of these stocks can turn into the leading stocks. But on the other hand, if you look over here at the percentage close to the 52-week high, you can see a lot of them are well off of their 52-week high, even though they have a high relative strength. Why is that? Because they're still stronger than, at least they're in the top 2 percentile or 3 percentile, 99, 98, 97, compared to all of the other stocks in the database over a yearly time period, with 40% of the emphasis on the last quarter. So these stocks, some of them can be well off of their highs and still have a high RS rank because they've outperformed over those time periods. Let's just bring one in here. This is an inexpensive stock. Let's look at a weekly chart. You can see that it's really been in a downhill move, but remember, 40% of that relative strength is over the last 3 months, which would be here and here and here, and most of it in the last month. So if I put a daily chart on here, you can see the last month here has accounted for much of that relative strength. Now let's go to the other end of it, Aspen Technology. You can see this one is right at its 52-week high. If I do a weekly chart, it has broken out to a new high, so this is one of your leading stocks. Now I could change the smart group, and maybe I'll do that next week, where I limit the RS stock, or the RS, to a minimum of 97, but require that they be within 20% of the 52-week high. And that's something that I think I'll do. So look, if you're in the Insider Club, look for that to happen early next week. Thanks for listening. Preserve your capital. It's, as you know, an extremely difficult market out there.